Hey, my name is Calvin Waite. I trade crypto for a living, and it's time to turn on your inner nerd. Okay, so first off, I am not a licensed financial advisor. I don't have any licensing. So this channel has to be taken as watching Calvin trade, his ideas, how things work. So one other thing, this channel is not affiliated with Humble or Blocks or anything else. This is my personal project, and I think there are people that will benefit from it, so that's why I'm doing it. Okay, I have a major announcement. So I'm gonna do videos at least once a week that is for free. I'm gonna explain where we are in the market, where we're headed, what I think is happening, and just do some normal interactions with the market. But I am working on a subscription video channel, and I am opening up my playbook. So you're going to see my live trades. You'll be able to either rejoice with me or be mad at me for winning, or laugh at me, or or deal with the disappointment when things go wrong. And I will show you how a professional trader actually deals with all the emotions in the market. And I'm doing it with my money, live trading. It's going to be awesome. So if you are curious, or if you're interested in seeing somebody actually do trade setups and what I'm doing, this will be interesting. So stay tuned. Good morning, everybody. Today's Bitcoin and Ethereum update. I'm going to do a little quicker since I've got some stuff to show you again today. But yeah, take a look at this beautiful green day. Interesting, isn't it? How the 200 week has become our support. It was, I kind of expected us to pop back up to above this line here yesterday before the end of day, but we did close below it. And then with today starting a new day, we are absolutely, this line is broken. Even though we're above, it is broken, which means I want everyone to be emotionally prepared for a couple of moves down. We have to touch the 50 at some point, and so I wouldn't be surprised if the next week or two we start going down. It'd be really nice if we could touch the 100 first, but this is something that's you need to be aware of this. This upward trajectory is losing its momentum. So that spells a shift in direction. If we close below the 50, or we start showing resistance at the 50 at any point along here, it could be pretty bad. So we're going to be watching this very carefully. On the good news side of everything, though, this line here is broken as well. This would have been a technical rejection if we had stayed below, but if we close above today, then this line is broken. So we'll be watching that at the end of day. For Ethereum, we are at the highest point that we've seen. So including wicks and everything else, we are forging new ground. So we've done all of our battle. We've made it through all the emotional stuff. We found support off of this line here. So when we came back down and hit this line, we bounced off of it today. So there is no resistance in our way on Ethereum. Ethereum looks really, really healthy. So it'll be kind of the only struggle that Ethereum will have is if Bitcoin decides to go sideways or have a bad day, because they kind of feed off of each other. But yeah, there's really nothing above us until we hit the 200. 200 right now is at 2266. That's coming down though, so by the time we get there, it'll probably be in the 21s or maybe 2200. But yeah, we're going to be cracking 2000 soon, and it'll be all over the news, and everyone will be excited. And so that could be a place where people start to lose it. But Ethereum looks great. Structure's awesome. Okay, so the reason we talked about position size and in risk management yesterday is because I wanted to talk about margin and risk management today. So margin is essentially borrowing money to invest. So taking out a loan to invest, doesn't that sound risky? And in fact, almost probably 99% of the investors out there, they use margin against themselves rather than for themselves. Margin is actually a risk management tool that you can use for your advantage, but it takes a very sophisticated investor to cut through how to use margin to your advantage. So just to kind of give you a back of the napkin example, if you put down $100 and you're doing a 10x levered position, so meaning you put down $100 to invest $1,000, what happens is if that $1,000 loses 10%, you've lost your $100. And it can get even worse, because if your $1,000 loses 20%, not only have you lost your $100, but you've now lost $200. You have to go find another $100 to break even. So margin is a very risky, because you can lose more than what you invested. So if you're not being careful with margin, it will burn you. And margins are the source of lots of liquidations, short squeezes, long squeezes, everything that makes people sweat. It's usually based in margin and borrowing. So I just wanted to read this one thing here. So margin, leverage conferred by margin, will tend to amplify both gains and losses. In the event of a loss, a margin call may require your broker to liquidate securities without prior consent. So usually crypto is so volatile that if you're investing with margin, you have to be extremely careful. Okay, so this is why, so seriously, you'd think about margin, why would anyone do it? Isn't crypto volatile enough? Well, the only reason you would is if you have proper risk management and position sizing nailed down to a T. See these percentages along the side? There's 5, 9%, 8, 10%. Crypto can go up and down 10% in a day so easily. I mean, you can do 20 and 30% in a day, and that's not uncommon. So when you're playing with margin, you're playing with fire. Well, let's say I wanted to put $1,000 into a position. If I take $1,000 and my stop is 20%, so I'm only willing to lose 20%, then my stop, if all goes well, means that I should lose $200. That should be my loss. Well, the alternative is that I can put $800 in a stable coin, or put it in Bitcoin, or something that is long-term. Some kind of a long-term place, even an interest-bearing, something stable. So I can take my 800 and put it to the side. And you really want to do this if you're going to invest in margin. You don't want to invest your entire portfolio when you're dealing with margin. But what I can do is I can take my $200 and I can leverage it by 5 times. So 5 is the max I would ever leverage. Anything more than that, and you are risking a lot. But so if you take your $200 and you're investing it at 5 times leverage, you are essentially investing your $1,000 while protecting your 800. So that means in a fast market or something with thin order books, if there's a slip that happens and it drops you below the 200, you're capping your loss at 200, and it's hard and fast. But you have this on the sidelines. You have this in a stable situation or even a small interest earning account. And this is now the amount that you can invest with. So I have kind of a philosophy of taking profits. So if you're investing $1,000, let's say that the underlying whatever you've invested in goes up 20%. So my $1,000 goes up 20%. It's worth $1,200. So on your $1,000 investment, you've made 20%, which is awesome. But your underlying, so the amount you've put at risk, is actually $200. So you've made yourself a 100% gain on your risk. When you're investing $1,000, you're putting $1,000 at risk. When you're investing $200 at 5 times leverage, even though it's more risky, you're actually putting $200 at risk, not the $1,000 at risk. So you've actually, from a professional trader's standpoint, you've actually decreased your risk exposure, not increased it. So chew on that for just a second. So margin is what destroys people because they do not understand position size and they don't understand risk management. But margin used well can actually decrease your risk exposure rather than increase it. So I'm still investing $1,000, but I only have $200 at risk, where in this case, I'm investing $1,000 and I have $1,000 at risk. So if I can keep my $800 off the exchange or in a hardware wallet or in a diversified place where I have more control over this 800, my 200 is actually on exchange. It's exposed to exchange risk and other things. And my risk exposure has actually decreased. So but I just cannot emphasize enough that when we're investing using margin, that we keep our position sizes small. If my intention is to place a $1,000 investment, I'm doing 1/5 of that, and it's for risk management purposes. So perhaps the $200 is the amount that I'm willing, or if I can afford or I'm willing to lose $200, this trade can be magnified potentially up to 5 times. So even though our underlying position went up 20%, what we had at risk has gone up 100%. And so this sort of plays out. My favorite thing to do, especially in crypto where things are super volatile, is to place an order where I hope that the underlying will make 100% return. So let's pretend that I've put in $200 to invest $1,000 and I have 100% return. So my total underlying has gone up to $2,000. Well, I've put $200 at risk, and I have my what I owe the bank is $800 back because I borrowed $800. I used $200 of my own. The bank matched me $800, and now my entire position is worth $2,000. So if I was to close this position, I have $2,000, and I'm going to subtract the $800 that I owe the bank that I borrowed. I'm also going to remove my original position. I'm left with $1,000. So my $200 has essentially had a 600% gain or a 5x return. So my underlying investment is essentially multiplied by 5 times after I close out my position. That's pretty sweet. And when a coin doubles, I like to take out a quarter of my position. If it triples, I like to take out half. And if it goes up by 3 times, I like to take out the final quarter. So I have some math. I've actually did this earlier so that I could just show you. But here's where we're going with this. So I've increased my numbers by a factor of 5. So my risk that I'm taking is I'm putting $1,000 into each position. So what I'm really doing is I'm investing $5,000. So I've borrowed $4,000. I have $5,000 in a position, but I've only put $1,000 at risk. If it goes up and doubles, then I have essentially my $1,000 has turned into $10,000 because my underlying has doubled. And so if I take out a quarter, well, so in other words, this is the $6,000 that I have if I was to liquidate the entire position. But if I pull out a quarter, I can put $1,500 in my pocket, and I still have 2/3 of or 3/4 of my position in. That 3/4 will eventually go up if it eventually doubles from there. So now this is a triple. The rest of my position is now worth $11,250. And if I take out 2/3 of that, which means a quarter of the total, then I can pull out $7,500 and put that in my pocket. And if I get lucky enough that that we quadruple our position and we go 300%, that final quarter is now worth $5,000. So if I close out the position and give back the $4,000, my total that I would come out with on a quadruple, is $10,000. So my initial underlying my hope for every trade that I'm making is that I'm trying to take $1,000 and I'm trying to make it into $10,000. And this is done through margin, and it's done by limiting my risk exposure. So I'm keeping my trades very small, and I'm keeping the majority of my portfolio in Bitcoin or stablecoin or off exchange in a safer place. And I'm able to magnify my returns, and I can potentially make $10,000 off of each $1,000 that I'm investing. So, moral of the story, this is a risky position. This $1,000 is it has it's a 50-50 chance that this will drop 20% and my $1,000 goes bye-bye. So I have to have such a small percentage of my portfolio that I can place this trade in my sleep, that I can place this 100 times. But if I can find a high probability trade where the odds of me losing my $1,000, let's say my chances of losing $1,000 is 2 out of 3. I put in 1,000 3 times, and 2 of those 1,000 are going to go to 0 and go bye-bye forever. But if the odds of that final 1,000 hitting 100% or a 200% or a 300%, and I can make more than the 2,000 that I've lost on average, then I've found a winning strategy. So we're looking for high probability trades, and we're looking for chances to take our investment and multiply it by many times. So the season that we're in currently, we are exiting red zones like crazy across the board. Every single position, I couldn't find anything in the top 100 that was still in the red zone. everything is trading above the 50. So when we're out of the red zone, we're in high probability trade area. This is where we're wanting to get in. There's one coin that did hit the green zone, so that's news. And as we get into the green zone, we find our tops. We find bottoms in the red zone. We find tops in the green zone. So we are scouring green zones for periods of weakness. And the cool thing is, on margin, we can also go short. So we can actually take advantages of coins moving down just as well as we are taking advantage of coins going up. So there's a lot to learn. And that is the purpose of my subscription channel that I'm about to do. We're going to go live just as soon as we can. I'm waiting for more development on cryptoinfluencers.com. Once they're ready to go, I'm ready to go. Like, I'm ready to do it tomorrow if we can get it. But I'm going to show you exactly how to place these margin trades, exactly what I'm doing. I'm going to show you how to do it. And I can show you my positions, which on a day like today, where everything's in the green, almost all of my positions are up about 50%. And I've got probably 4 or 5 that are over 100%. And it's because of risk management, high probability trade entries, and this situation where things go up 20% and I've doubled my initial investment. I hope you guys have an awesome day, and we will teach you more and show you more stuff tomorrow. Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you, don't get caught up in all of the hype. You guys are gonna kill it.